Please note, exemptions and non-liable payments may influence the amount of wages subject to payroll tax. For the purposes of this video, reference to wages or wages paid refers to those that are subject to payroll tax, excluding any exempt wages or non-liable payments. In this payroll tax video, a reference to jurisdiction means a state or territory of Australia.
Welcome to the Harmonised Payroll Tax video series. My name's Daryl. In this session, we'll look at the exemptions available for genuine bona fide contractors and how payroll tax may be payable on payments you make to contractors that are deemed employees. It should be noted that Western Australia is not harmonised in the area of contractors and that the content of this video should not be used when considering whether a payroll tax liability exists in Western Australia on the basis of payments made to a person that is not your employee. When making a determination in this context, the Western Australian Office of State Revenue relies on the common law interpretation of an employee, and you should refer to their website www.osr.wa.gov.au or contact them directly on 1300 368 364 if you require further information. The contractor provisions are intended to tax payments to contractors who provide predominantly labour services and work exclusively or primarily for one principal in a financial year. The payroll tax legislation contains 3 specific and 6 general exemptions for payments made to genuine bona fide independent contractors. If any one of the 9 exemptions applies in a financial year, payments made under the contract are not liable for payroll tax in that financial year. The 3 specific exemptions are owner-drivers, insurance agents, and door-to-door sellers. Payments to contractors who provide these services do not attract payroll tax. Please note, the specific exemptions for insurance agents and door-to-door sellers do not apply in the Northern Territory, New South Wales or Western Australia. There are also 6 general exemptions. Let's look at each of these a little closer. The simplest of the 6 exemptions to resolve is the 90-day exemption. This exemption is based on the total number of days a particular contractor provides the same or similar services under contract to a principal in a financial year. If the total number of days is 90 days or less in a financial year, then all payments made to that contractor in that financial year are exempt. Any work carried out on a given day counts as a full day, and the days do not have to be consecutive. It's important to remember that if a contractor provides the same or similar services to a principal under a number of contracts in a financial year, the duration of each of the contracts are added together to determine the total days worked. For example, during the financial year, an employer hires a contract worker under 4 separate contracts. The first for 35 days, the second for 20 days, the third for 10 days, and the fourth for 30 days. In this scenario, the contractor worked a total number of 95 days in the financial year. Therefore, the exemption would not apply, and the total payments must be declared as wages for payroll tax purposes unless another exemption was applicable. If a principal is unable to determine the total number of days worked, a formula called the replacement method can be used. More information on this exemption is available in Revenue Ruling PTA 035 version 2. To be eligible for this exemption, a contractor must provide services that the principal requires for less than 180 days in the financial year. If so, payments made to the contractor are exempt from payroll tax. The number of days of services required in a financial year is the total days a principal requires workers, either contractors and/or employees, to undertake that or a similar service. For example, an alpine ski resort does not have its own employees as ski instructors, so hires several contract ski instructors to provide lessons during the ski season, which is a maximum of 120 days. In this scenario, the total number of days is less than 180, therefore an exemption would be available for payments to all the contract ski instructors. More information on this exemption is available in Revenue Ruling PTA 020. To summarise the difference between the 90-day and the 180-day exemption is that the 90-day exemption refers to the number of days when individual contractors performed a service, and the 180-day exemption refers to the number of days a particular type of service is required by the principal, whether it is performed by contractors, employees, or a combination of the two. Where a particular type of service is required for 180 days or less, any payments to one or multiple contractors providing that service is exempt. It should be noted that for both the 90-day and the 180-day exemptions, any work carried out on a given day counts as a full day, and the days do not have to be consecutive. Where labour is ancillary to the supply of materials and/or equipment by the contractor, an exemption may apply. This exemption recognises those situations where the main purpose of the contract is to provide materials or equipment. For example, the supply of a backhoe with an operator by the contractor would be exempt, as the labour would be ancillary to the equipment hire. In these instances, the value of the materials or equipment is the major component of the cost of the contract. This means it is not a relevant contract for payroll tax purposes and is therefore exempt. More information on this exemption is available in Revenue Ruling PTA 033. This exemption applies when a contractor provides services that are not ordinarily required by the principal, and where that contractor ordinarily provides the same services for the public generally. To satisfy the latter, the contractor must derive less than 40% of his or her gross trading income from the principal during the relevant financial year. An example would be where a bank engages a painter. These services are not normally required by a bank, and the painter provides that same or similar service to other clients and did not receive more than 40% of his gross income from the bank in that year. In this scenario, payments made by the bank to the painter would be exempt. Where a contractor, for example a company, a partnership or a sole trader, engages employees and/or other contractors to perform some or all of the work required under the contract, an exemption is available. For this exemption to apply, the makeup of the people undertaking the work depends on whether the contractor is a company, a partnership or a sole trader. Please refer to Revenue Ruling PTA 023 for specific details. An example would be where a builder enters into a contract with an electrician to install electrical items in a room and restore the walls to their original state. To perform the work required under the contract, the electrician engages a plasterer and a painter. Payments made by the builder under that contract would be exempt from payroll tax, as the electrician engaged others to complete the contract. This exemption applies when a contractor ordinarily renders the same services to the general public in the financial year. This exemption requires the contractor to actually work for other clients during the year. The fact that the contractor advertises their services publicly isn't sufficient for this exemption to apply. Generally speaking, an exemption will apply where the contractor provides their service to 2 or more clients during the financial year and works on average 10 days or less per month for the principal claiming the exemption. For example, a business engages a contractor to build a computer program. The contractor works on average 10 days or less during each month they are contracted for. The contractor has also provided services to at least 2 other businesses during the financial year. In this scenario, an exemption would apply. Had the contractor worked on average 11 days or more per month and worked for at least 1 other business, this exemption may not apply. As mentioned previously, any hours worked on a given day counts as a full day, and the days do not have to be consecutive. More information on this exemption is available in Revenue Ruling PTA 021. If an arrangement between a principal and a contractor doesn't fit within any of these exemptions, then the contract is called a relevant contract, and the employer will be required to pay payroll tax on the amounts paid to the contractors. The amount paid to the contractor, excluding GST and an approved deduction, will be deemed wages and therefore attract payroll tax. Please refer to Revenue Ruling PTA 018 for approved deduction rates, which take into account materials and equipment provided by various types of contractors. Hopefully you found this payroll tax video useful. To view other videos available in the Harmonised Payroll Tax series, visit payrolltax.gov.au. You can also register for the Contractors webinar on this site. It is our aim to give you as much information as necessary to assist you in meeting your payroll tax obligations. Remember, if you are in doubt, always contact your tax advisor or nearest revenue office.